Welcome to CSM Talk, the CSM podcast that focuses on two fundamental aspects of customer success: value to the customer and value to your organization. Today on Rule 40 Success, I'll be asking my guest to focus on a particular area of the Rule 40: new logo acquisition, upsell and expansion, churn or profitability, and give their point of view on how they would partner with customer success to drive aspects of the Rule of 40 and how this delivers customer value. Okay, got it? Good. Let's CSM talk. Right, welcome to CSM Talk, Rule of 40. And today it's my great pleasure to have as my guest Gökçe. So before I carry on, I'm going to stop talking and I'm going to let her introduce herself.
Hi, Kevin. Thank you so much for having me. I'm Gökçe. I'm an investment professional at Ox. I'm based in London and I've been with the team for over 2 years now. I had started my career in a pre-seed stage B2B tech fund, but over the years I worked in corporate innovation incubation centers, as well as on the other side of the table, so at a seed stage startup. And most recently, I was a venture lead at Deloitte Ventures, looking after a portfolio of software products and taking products to market to enhance the consulting service line. So that's me.
Yeah. Cool. And in terms of at Ox, what stage companies do you particularly focus on?
Yeah, sure. So we are a specialist venture capital firm. We partner with European and Israeli B2B SaaS companies at the scale-up stage. So that stage typically translates into late Series A and Series B deals. And we look for companies that have clear evidence of product market fit and emerging signs of what we call go-to-market fit.
Cool.
Yeah.
Good. Right. So before we start, I'm going to ask the icebreaker question. And like I always say, but I never get round to doing, I should really have a big board behind me with everybody's name and their answer for the icebreaker question. So the icebreaker question is very simply in one word, not 3 words, 5 words, or even 0 words, but in one word, sum up customer success.
Success is going to be my answer, and it's going to be a very cheeky answer, but I think success is the one word that I would use.
I kind of like it. I like the audacity of you actually just going, do you know what I'm going to do? I'm going to say, you want one word, right? Chop off customer. We're going to make it success. All about success. I like it.
Because I think it's not only like enabling success for your customers, but it's also enabling success for your own business through that. So I think success is a good one.
I do. I often say value is the one that I would use. And right, for those of you from mathematical bent, I always say if value is a quadratic equation, what are the 2 answers that it solves for? And that's value to the customer and value to the company. So it is, value is like a quadratic equation to me. It's a question with 2 answers.
Exactly, 100%.
Cool. So, okay. Right. So in terms of the Rule of 40, so looking at it overall, for those who are just tuning in and want to get a framework on it, it's the ARR growth from new business. It is the upsell and expansion ARR. It is the churn ARR, take that off, and then profitability. So those 4 elements. Which of those elements would you like to discuss with us today?
If I were to pick one, I would focus on retention today. And the reason is, as I mentioned, we are, B2B SaaS investors, and the premise of the SaaS business model is that revenue from a customer will be recurring and highly predictable, so that it will enable the business to, recoup the cost of acquiring that customer over time. So if you're not retaining your customers, you're not going to be able to do that. So I would say retention.
So your payoff on CAC is from customer lifetime value, right?
Exactly. So if I were to explain a bit further, so you'll be spending some money to acquire a customer in sales and marketing, in other activities, which we'll call customer acquisition cost. And you'll start also earning money from that customer once that customer is onboarded. So how long that customer stays with you will determine how much you'll earn from that customer over the lifetime of that customer. And if you're spending basically, if you break even in, let's say, 15 months, but the customer only stays with you for 12 months, then basically you don't have a viable business in simplistic manner, right? So as long as you're able to keep your customers happy for longer than the payback period, you are likely to have a viable business.
Cool. Right. So in terms of retention for the businesses you look at, what are the key partnerships, or what are the key initiatives that you would be looking for to drive that? That there's about 2 or 3 things you might be looking at a business and saying, yeah, they've got things, or there are data points that you're looking at to say this is looking like a fairly healthy business. What are the kind of things you look for?
So multiple things, and I would say that it varies from company to company. But these are the things that we look at before even we partner with a company, so at the due diligence stage, but also things that we continue to look at as board members. So I would say that historical customer retention is one. I would say product telemetry is a good one. And I would say things like even on the more qualitative side, how companies engaging with their key stakeholders, what's the cadence, how actively they're managing their big customers. So that's something that we look at.
Okay. And is there anything in terms, at the stages you're looking at, is there anything in terms of value realization to the customer that you might be looking at? So I know customer success organizations may be looking at running a ROI realization plan, which says, look, we put this in, it was sold on the proposition to take this much cost out of the business in this much time. They got up and running and live, and then we run the success program for their CIO or CFO of our customer to realize this gain in here. Do those kind of things have an impact, or are they?
Absolutely. Yeah. So maybe taking a step forward and going back to that, things that we look for as an investor. So I've initially mentioned product market fit. So even that includes and is evidenced through a super clear value proposition to the customer, but also a tangible return on investment for the customer that you're serving. So we do look at those things even when we're assessing product market fit. And then I would say again, another thing that product market fit is measured by is how the customer cohorts are evolving over time and how they are behaving. So you'll see how expansion happens, both in terms of value, but also retention in terms of logo churn. So understanding which customer segment your product is better serving, because product churn can happen for one customer segment, but it may not be the same for another one. So going a level deeper and understanding the value delivered to certain types of customers and why there's a better fit and how that is being delivered is a key area of diligence that we go through. And with the companies that we partner with, for instance, at times we do look at basically customer retention forecast at an account level, especially if there are enterprise customers, to understand the activities that are happening, but also to your point, sometimes at that onboarding, at that handover from sales to customer success, there will be a success plan that will be over 6 months or 12 months, depending on the product that you're selling and the size of the organization that you're selling into, and how are you progressing towards that plan. and what are still some of the upselling opportunities, but also opportunities to increase stickiness of the product and how that looks like. There are all the things that we always discuss, if not during the board sessions, just because usually how we approach board sessions is we have pre-materials shared, and those pre-materials will include everything, both quantitative and qualitative status update on the financials, business metrics, KPIs, sales and marketing, you name it. But we usually do those reviews offline and share questions and answers offline, but then choose a topic of a strategic topic for discussion for the board session. And if CS is the chosen strategic topic for that quarter, then we go really deep into those details.
Cool. Okay, so you mentioned something about looking at particular trends in particular segments. Do you pay any attention to what is essentially the company's value proposition and the ICP it's after, and non-ICP customers, like what that balance is? Is that a factor you look at?
For sure. And ideally, all your customers are your ICP, but of course, in reality, that is rarely the case. And I also come across many companies who are, shifting from one ICP to another, or exploring whether they can expand into another ICP. So in that case, it's good to link the data from both historical revenue, but also your current pipeline and how that pipeline is evolving to the story that you're telling me, how your business is shifting from one ICP to another. Okay.
Because there are studies being done on kind of churn rates within a particular ICP and outside of ICP. And also, I actually just interviewed somebody recently who did a paper on churn and the 3 stages of churn, which he said was your early stage churn, it's like in the first year, mid stage, which is early stage, which is basically onboarding, mid stage, which is within the first year, and then longer stage, which is within like a year plus, and those things. And he said by far and away the biggest thing he found was it was early stage churn was the one with the most contributing factor towards overall churn, and where they could make the biggest gains in actually improving their gross revenue retention.
Yeah, that's super interesting. And I think that's usually more visible in SME businesses, where the feedback loop is faster and the contract length is shorter. And I would say that would be visible in an enterprise business, in the customer success business, but probably not in customer revenue metrics that you would be analyzing for a longer time. So if you're after leading indicators and if you want to be more proactive, definitely the product activation, product usage metrics, and how that onboarding is going will give you a view into basically churn waiting to happen. It's interesting that you mention it, because it makes me think of a company that I've looked into in the legal tech space. So this company, when we were diligencing it, had really good growth metrics, great at acquiring new businesses, and was looking to fundraise off the back of that success on the top line growth. And then, as we always do, we asked for product metrics to see basically how customers were adopting the product. And it was super clear that they were not even activating customers. No one was using the product. And it was merely churn waiting to happen in a year's time, if not sooner, just because they had a long contract term. So we passed on the opportunity just based on that.
So they were committing people to long-term contracts, like a year plus, maybe multi-year contracts, maybe.
Exactly.
But activation wasn't really happening.
Exactly.
the story was where our net new business growth is looking great because we're landing all these contracts, tying people into a long time, but actually no one's really getting up and running on it.
Exactly. That was exactly the case. And if you didn't look into product metrics, you would not see that.
Wow.
Yeah, yeah, exactly.
My word. How do you
Yeah.
oh this I mean,
I'm sure.
I'm just thinking it and going, that's quite glaring. But it's interesting that perspective of, because there is a preconception out there, really, that the whole world of SaaS is new business driven. It absolutely is all about new business. And the fact that an investor is looking at this and going, sure, your new business is looking great, but actually, longer term, this is not a good bet. And the fact those decisions have been made, I think, it's very refreshing to hear, especially for people in customer success, who feel, well, we're the poor relation, and this is all about new business. And if new business has got a great story, then everything's fine, and those kind of things. So that's it's very good. It's very good insight to have that.
No, absolutely. And I think the investor narrative has also changed from the peak of the market, I would say, in like 2020, 2021 to where it is now. I mean, we were always of the opinion that you cannot build a sustainable business with a leaky bucket. But I know that generally investors paid less attention to retention and more attention to new business acquisition when the market was a bit frothy. But now everyone realizes how important it is to be able to sustain your customer base. And it just makes so much sense if you're a SaaS investor to put value in retaining that customer. And everyone knows actually upselling to your current customer base can drive top line growth and is a much more cost efficient way of growing your top line. I'm sure there are many studies, if I remember the numbers correctly, but it's 5 times cheaper to upsell to your customers than to earn new customers.
Yeah, customer-led growth is really, I mean, in this particular situation we find ourselves in currently in the climate, customer-led growth is really the big thing that people are concentrating on. It's really interesting, all these things you're looking at. You're looking at a cost of acquisition, you're looking at payback period, you're looking at what the customer lifetime value must be to hit payback and break even point. You're also probably looking at, maybe it sounds like, value realization happening within that, what you might call a break-even period, so as to make a renewal secure, really.
Absolutely. And one thing that every investor does is, interview current and potential customers to understand the value that they are driving from the product. And we continue to do that even after we partner with businesses to understand, okay, how did you evaluate the product and the value that you have received from it? How do you make renewal decisions? What needs to happen for the renewal to take place? What did you think the product was going to provide, and then what did actually happen? So all those things, if not quantitatively, they do feed into investment decisions in a qualitative way. And I think they are the most insightful discussions that we have.
And those are hang on there. You're obviously no. This is honestly, this is is this the kind of insight you share with your portfolio companies?
We do. I know that we do. I'm not sure if everyone does, but as Ox, we very much believe that there is more value to the investment memos that we put together being shared with the management teams that we work with than them sitting on, someone's laptop and being forgotten after, being discussed in an IC meeting. So definitely we do play this back to the companies that we work with, and they really appreciate all the insights.
This is exactly the kind of insight you want on your customer health and renewal forecasting cadences, of actually understanding within, you know, your customer engagement what it is that's going to drive the real renewal part of it, and why they're going to renew, and what are the things you need to be focusing on in particular. And I think what's interesting, what you've done, is that when sometimes what can happen is that, does a customer see value out of the product? Is it's something which is missed out of the health checking cadence of like renewals. It's always like, is there issues with the product? Are we politically engaged high enough? Is there implementation issues? They're all very, what I call operational things. But one thing that is sometimes missed that you're picking out on is, well, actually, are they seeing an ROI? Can they articulate what that value is?
No, absolutely. And I do find that just because this might be bucketed into a difficult conversation bucket, customers tend to be more open and sharing with us than they are with the product providers themselves. So when we ask about, okay, what do you not like about the product, or what did not basically deliver to expectation, they are very forthcoming. And also in sharing things like, actually, we bought the product for X, but realized we're actually using it for Y. That's something that they are very open with us. And also on the competitive side, so what other alternatives have they looked into, and why they have chosen this particular vendor to go with? And if they were to make the same decision again, like how have their purchasing criteria changed? So all things.
And one final question: if I was you, if you were me, would you invest in this company?
I do ask that. I do ask that as well.
Serious?
I seriously ask that question, and you would not believe the answers I get. I love that question.
Your job sounds like so much fun.
I know. I'm getting all the gossip, right?
Cool. So, I mean, this has been great. This has been very enjoyable. Just to kind of wrap things up, what's your one big takeaway of customer success, working to put something together which, you know, shows a good, healthy partnership with investors? What would be your one takeaway to a customer success leader?
Yeah, I would say that if not to the investor directly, maybe indirectly to us as people looking at the overall health of the business and the strategy, and understanding, you know, whether the product is delivering value. I would say being a good communicator with both customers and also the rest of the business is key for CS leaders. And the reason I say this is I think the more isolated the CS function is, the more a customer support function they turn into. And I, as an investor, appreciate the strategic value of customer success. But I know that some organizations might view them as more operational, even though there is now increasing appreciation of the value from a strategic perspective. Just because with the specialization of go-to-market functions and scaling of the business, keeping marketing, sales, customer success, product all close friends, and providing that 360 view on a customer can become really difficult. And if key information is lost during handovers, or worse, when teams are not incentivized properly and they have conflicting KPIs, like the value delivered to customer gets really impacted. So for CS leaders, if you are able to put in the right structure and processes in place for the data flow, for communication to happen, I think that, and to have those feedback loops with like sales and marketing, product, and everyone, I think that would be like a key value delivered to everyone, including the investors. And I've seen this happen. So for instance, sometimes a customer is doomed to churn because they were sold the wrong product. And in that case, there is very little that customer success can do. But if you're providing that feedback to people generating demand, people closing businesses, closing deals, then you're delivering as much value as preventing a churn to happen.
You you touched upon a very big subject for another podcast, which is everybody with aligned KPIs. You know, I'll stop there because that's
Yeah, absolutely. I feel like if you scratch the surface on like everything that we touched on, you could have like another session on every topic, because CS is such a big topic and touches on so many different things. So I understand where the sentiment is coming from.
cool. Look, this has been really, really enjoyable. Thank you so much for being our first investor on CSM Talk. So
Yeah.
if people want to get in touch with you, is LinkedIn the best way to do that?
LinkedIn is great.
Okay.
They can reach, and I think my email is also on our website, on the Ox team website.
Okay.
So we are very open to communicating with, founders, entrepreneurs, other investors. Yeah.
Cool. Well, what I'll do is I'll have links to Ox and yourself on LinkedIn, and to the YouTube and our Spotify podcast. So, Gökçe,
Yes, sounds
thank
great.
you so much for being on CSM Talk.
Thank you, Kevin. Thank you so much for having me. Truly enjoyed the conversation.
Okay, thank you.
Bye.